Welcome to tonight. We have a special treat. We have a very informative uh, just chat with two good friends of mine. I've known Hector Martin for a long time. Hector and we started with Hector. How many agents did I have? Was there only 20 agents that I think we had?
26.
I think it was 26. Yeah. Hector walked in from First American Title and was introducing himself, and he has been my sales rep for the entire Best Choice Realty since that time. And that was close to 14 years ago, Hector, I think is when we met.
I
Um,
see it. So,
so
yeah, somewhere around there.
yeah,
Yeah.
so we're excited to have Hector. He's going to be sharing his perspective with crypto and First American, and then Jerry McNulty. His wife, Erin, just joined Best Choice Realty just a little bit ago, and we're excited to have her. She comes to us with a lot of experience, and then Jerry is her preferred lender. I would hope so, right, Jerry?
That's right.
So we're excited to have Jerry, but he is doing crypto and he's got some tips to share. So he and Hector are going to kind of give us a treat tonight. I am just all ears. I'm just learning. Treat me like I'm a new person that's never done crypto. Give me some basics, and then hopefully by the end, we have 30 minutes just to get me to the end where maybe you're talking above me, and that's perfectly fine. I don't know much about crypto, and I would love to hear from two people in the industry that have experience working with these types of
And if you guys
people.
have questions you want to pose, or maybe you want to be a little shy and you want me to pose the question for you, go ahead and throw it in the chat and we'll open it up for questions at the end. So don't be shy. Throw it in the chat and I'll ask the question for you.
All right. Jerry, you want to kick us off? You want to tell us about your story, what you've been working on?
Sure.
Okay.
Sure. Again, I'm Jerry McNulty. Erin is a real estate agent with you guys, and she's my wife. And we've been working together for almost 10 years. And I've been with Fairway for that long a time. I haven't moved. I've stayed with Fairway because I love what they do and what they stand for. Tonight, I want to tell you a little bit about a transaction that Aaron and I were able to get through, kind of bending the crypto rule, if you will. A lot of lenders have been very, very strict about the way that they accept crypto. A lot of times the buyer will have to liquidate his crypto account or some of it, put it in his account. It'll have to sit there for at least 60 days to season so that they can actually accept the transaction without having to source it. Um, and as you know, sourcing money is everything in lending. We have to know every big deposit that goes into the account and explain why and where it came from. The reason why that they won't accept crypto is because most crypto based accounts don't have what are being called as statements. They have transaction summaries or transaction histories. And as a lot of you, if you don't understand, the difference is most transaction histories don't have the same information that a bank statement would carry, such as your full name, the account number, the bank's address and information, things of that nature. But what we're able to do is we're able to look at certain things like Coinbase. Coinbase actually has that information on their transaction histories. And we got the underwriter to actually accept that transaction history so we didn't have to season the funds and we could show the bank statement with that deposit going in. And it was easily sourced because we had both the transaction history, or we called it the statement, from Coinbase, and we're able to expedite the loan and not have to wait for the 60 days of season. Otherwise, this buyer would have lost the house that he wanted to get because the seller didn't want to take it off the market for 60 days and wait for this guy to have money not show up in his bank account, basically. And it just didn't make any sense. So we fought with the underwriter. We got it approved. And then we found out that later we had a long discussion, me as a Fairway representative, and then my loan officer assistant, Sarah Pape. She also was very accommodating and getting this done. And we had a talk with all the underwriters and said, why are we having this problem? It's ridiculous for us to penalize sellers or buyers, sellers and buyers, to have to worry about this every single time. So we're able to get this passed now. And so we're past that. That's a wonderful thing, and that's a big step towards crypto. I'm going to read something to you that I got from one of the articles I found. It says why it's the right time for crypto and mortgage. And recent developments propped up by a crypto-friendly administration in the White House, driving an easing regulatory environment, also makes the current moment the right time to prudently integrate eligible crypto assets into modern mortgage lending. Today, an increasing number of consumers including crypto in their investment portfolios, while major financial institutions are deepening their involvement in crypto assets as well. Multiple trends coming from various directions meant the entry of larger companies into crypto waters would come in short order, according to John Geersma, managing principal and business technology consulting at firm Capco. The mortgage industry needs to consider digital assets as a real asset class. One of the reasons is that millennials and Gen Z are very into this type of currency. And that's important that you guys know that because they are the future buyers of homes. If you guys are aware of, or if you've kept track of, the average age of a home buyer or a homeowner, not a home buyer, but a homeowner is now 59 in the United States. 59. It was 39, 15, 20 years ago. So that shows you what's happened with the affordability crisis that's happening in America, especially on homes. So when you look at the banks that are adopting stable coins and doing digital currency, there are a lot of things rolling out in 2026. Hector will address a few of these things that he's found that him and I talked about earlier. Last year, JP Morgan Chase revealed plans to allow customers to pledge some forms of digital assets to help them qualify for secured loans. And that is a big, big doorstep to mortgage loans. And so we're looking to see how these work out in order. And then I think as that progresses, you'll see more and more crypto involved in mortgage. It's followed its earlier decision to accept crypto exchange trades funds to be used as loan collateral. Much of the recent push to expand cryptocurrencies, and this is important, into mortgage lending originates from top leadership. Last summer, the Federal Housing Finance Agency Director, Bill Pult, and that's the FHFA, publicly directed Fannie Mae and Freddie Mac, the agencies he oversees, to make plans for eventually considering them as a qualifying asset. Any loans involving non-liquidated crypto can currently only be sold on private markets. So that leaves public lenders out, like Fairway, like Redfin, like just about everybody. So mixing mortgage with digital currency has its share of critics as well, with Pulse Call receiving pushback from consumer advocacy groups. Pulse's move, though, was followed by announcements in subsequent months from other companies and tech firms to incorporate cryptocurrency holdings in the mortgage lending or funding process. You're going to see this happening more and more as we continue. And I'll let Hector talk about a little bit about how he's seen it happen and how it's worked for him in title and escrow and how it's working inside and outside of escrow. And I'll let Hector talk about that for a few minutes first. Does anybody have any questions with what I just read?
No, let's keep it going so
Okay.
we'll get the questions at the end. That's a
Okay.
great intro, Jerry, that it's happening. We're getting asked in the office a lot before we go to Hector. I've got a buyer who's considering buying, but he's got his money tied up in crypto. And how does that work? Is it secure? Does escrow handle it? And I think, Hector, we found, well, at least when Shannon and I were looking, some title companies will and some will not. Can you explain how that works from the title and escrow side of things?
Yes. So obviously for lenders, when you're doing a partial purchase with crypto and partial finance, that's really complicated for them. These transactions are considered a high risk transaction. So I don't really see that many. With that being said, we not too long ago we closed a $4 million building with crypto, no cash. So anyway, uh, basically, I'll explain a little bit more, but in a nutshell, if you want to remember something, is that funds do not go through escrow. It's all outside of escrow. Once we get a purchase and sale that indicates they want to buy with cryptocurrency, we'll send them two forms. First of all, we need to make it clear you are agreeing that this is going to happen with crypto, and we need a dollar amount assigned to it because the values are very volatile, so it can go up and down. What's the value going to be? The purchase price is $1 million. Okay, what is the value of the crypto? And the crypto has several different names as well, right? But let's call it crypto for the sake of easiness. So once we have that form that they agreed to do that, and payment again happens outside of escrow, so the buyer will send the money to the seller via whatever electronic ways they want to do it, and that might be the risky part right there. So then the seller, once he receives the fund, he confirms with us, yes, I received, $1 million or 800,000 in crypto. You are good to go with writing up the settlement statement. We'll show what the buyer paid as a credit for him, a debit for the seller, and we'll go from there. Business as usual. Funds are transferred outside of escrow, basically. Okay. With that being said, I do. So we have a, it's not a clock hour, but we have a 1 hour class on crypto, and I was able to get the materials from there. So there's an interesting part here on the form that we send, and I'm trying to make this bigger here. But anyway, so let me see if I can do that. Okay, so this is what the form that we send out, this is what it says. It says, buyer and seller parties agreed that a portion or all of seller's net proceeds will be delivered from buyer to seller outside of escrow in an agreed quantity for the following cryptocurrency. Then you name which crypto you're going to use. The parties instruct First American Title to as follows. So, for the purpose of determining the amount of the in a U.S. dollar of the consideration to be paid outside of escrow, the parties agree that the value of the crypto is X amount. So once the seller confirms receipt of the funds with the settlement agent, as set below, the settlement agent is to credit buyer and seller with the amount to close on escrow. So buyer will deposit in escrow US dollars all amounts in excess of the above described consideration necessary to equal the agreed upon purchase price. Okay, so it's a whole bunch of blah blah blah. So, but the important part is that, uh, for payoffs, for example, if we're taking care of the payoffs, we will need that money sent to escrow before closing. So that's either maybe the buyer has to cash out some of the Bitcoin to send those funds in, or it depends on what the agreement is between buyer and seller. Because we'll go with whatever you guys put in writing, as long as it's legit, we will close it. And so yeah, I mean basically that,
So there's a
so.
disclaimer, it sounds like, that you guys are putting in
We take
escrow.
no responsibility for the
Okay.
transfer of the funds. Zero liability. So if the buyer was a fraudulent one, it's not on us. We
Okay.
will close the deal except for the transfer of funds being outside of escrow. Everything else is business as usual. The title has no difference. The title insurance is so it's a $1 million purchase. We don't care. It's purchased in crypto.
And
So
taxes, I'm
And that's
assuming. You still do the same closing
taxes is the same,
statement, settlement
exactly the
statement.
same.
There's nothing
Everything
different.
is the same. The only
Okay.
thing is that the funds go outside of escrow, in a
Got it.
nutshell.
and it's the same way for all lenders as well. There's just no way that we could accept crypto as part of the down payment without it being cashed out first. And
Yeah.
that's what they're trying to get around now. That's what everybody's, the big advocacy groups are trying to come to grips with. How do we quantify the amount of money that's actually available from the crypto account? I saw one question that said, well, what happens if it's in a wallet it's in like a 401k or something of that nature? How do we avoid penalties? All of these questions are being asked. And that's what they're trying to get around to figure out how we're going to be able to use this without penalizing the buyer.
Got it.
Um, right now on a 401k, you can borrow the funds if you need to without a penalty and without paying any taxes. You can do that in any qualified account. But right now, a lot of the crypto accounts that you find are not in qualified accounts, though some are. And we're finding out how ways now you can still borrow in those accounts because they're qualified accounts, and you can take that money out without and just pay yourself back. Right now, there are companies out there like Milo. Milo is one company that actually will loan against crypto balances or crypto accounts. And
Hmm.
so, if somebody is looking to not withdraw the money because they would experience a capital gains tax, for instance, and it would be easier for them to go ahead and borrow against that, Milo would loan them the money. They could use that as part of their down payment or for their down payment. It would, of course, go against their debt to income ratio, their
Right.
DTI. So that would have to be included, but or they would have to liquidate, and so that or liquidate the amount of money that they need to use for the down payment. There's no other way of doing it, unfortunately, at this particular time. So
Right, right. So I was gonna say that. So up until at least till the materials that I have in this crypto class, every single crypto purchase has been, if there's funds, there's additional funds, it's been cash, not through a loan. So it's really interesting, having Jerry here, seeing the lender aspect of it, because this is right,
Kind of where we're going, isn't it,
this
Hector? I
is
mean,
where we're going
we're
for
getting
sure. Yeah.
creative. I mean, we're
Yeah.
getting creative with how we're doing funding because the rates are so high, and so we've got to
Right.
kind of pool our money together. Oftentimes,
Mhm.
you got families that are purchasing properties and they're trying to pull assets or different types of investment classes together to purchase a
Right.
home, and that's happening. These compounds, I just read about Oregon, how one person used crypto to buy, this like compound, and then she ended up refinancing it, Jerry, and then putting more houses and put all of her entire family on
right.
this plot of land. So
Once she
I love
owns
the
it, she owns it.
creativity.
Yeah. Yeah.
Yeah.
Once you own the property, it's your property, no matter how you achieve to get it, but
Right.
it's your property to do with as you please. I'm very happy to say that on the one thing you said about the high interest rates, I was able to get this buyer 5.3 quarter in first time in 2 years. So
Nice.
happy about that. We
That's
are under
incredible.
six now, ladies. Wonderful times.
Bring it.
Yeah. Keep
So
it
I'm
going.
ready. After 4 years of very
yeah.
slow, I'm
Yeah,
ready.
we all are. We all are,
Yes.
trust me.
Yes.
But yeah, but you're right. So, but this is the trend, and this is why we have to stay on top of this. And lenders and real estate agents really need to communicate right now, especially because you don't want to cost uh, your buyer or your seller time and the opportunity for a sale. It's I've seen too many times where lenders like myself have failed to let the agent know that the money is coming from crypto for their down payment and that they need 60 days to close, you
Yeah.
know, and all of a
That's a
sudden,
big deal. I think
isn't
that's
it?
the
Yeah.
number one thing that these guys should take away is you've got to have the seasoning. And then you have to use the right forms so that
Yeah.
escrow then knows what we're doing because it's not a
W-
typical thing.
Right.
Well, we make it really simple. We'll just send two forms out, and they're literally 2 pages, not very complicated. It's just needs to be clear that they understand that we're using crypto funds and that we're not liable for the transfer of the money. But flat out, that's really all, that differs from a regular purchase. And I saw a question pop up there. What's the percentage of crypto purchases last year? Very little,
I
not
There's not very
many
many.
crypto
I
purchases,
I
but
can
it's
tell you.
growing and we're going there. That is
I,
the trend.
I
Yes.
can tell you that over 14% of first time of home buyers last year used crypto for their down payment. So that's how fast it's growing.
How
Yes.
many? How
Yes.
many did you say?
14%
And where was
last
that
year.
at? What state
Uh,
was that in?
that's nationally.
Okay. Is there any way you can send that data to us? We can take a look at it?
I can find the article I
Okay,
got it
great.
from. As
Thank
a
you
matter of
so
fact, I
much.
think I have it.
I really appreciate that.
Yeah,
Yeah,
this
I
is
do
all
have
very
that.
important. It's very relevant to what we're experiencing. We
Yeah.
got a lot of people out there that are investing and they want to know how they can, what that will do for them, especially when they're making decisions about their properties, Jerry.
And
Yes.
I'm sorry, Rochelle. Somebody was asking if I could share those forms. How about Rochelle? I'll just send you the
Send it to
class that
me.
I have. It's
Okay.
literally like 10 pages, and it has the forms that we will send out to buyers and sellers.
Perfect.
So, and there's some terminology of, about kinds of cryptocurrency and whatnot. I'll email that to you. You send it out to your folks.
So I'll send everything out on Friday, you guys. If you want to see what Hector's referring to about
Mhm.
what escrow needs, we'll put
Right.
that on the Friday email that goes out to everyone. Awesome. There were some more questions that came in. Jerry, did you have anything else to say on that note?
No, I think that's how, and I'll go ahead and get I'm gonna write that down before I forget, but I'll get the origination from that 14% that I got. I think I have the article here, but
Perfect.
I'll make sure you get that.
Jennifer Park said, can you also please explain what the rule is if the crypto is stored in an offline wallet instead of an exchange like Coinbase or Gemini? Is it the same rule?
I would think that that would mean that unless it's something that can provide a statement that meets the guidelines, and I'd have to look at the individual wallet in order to verify it or to see if we could qualify it. If not, then it would probably have to be cashed out prior and seasoned prior.
Yep.
For escrow,
Um,
it doesn't matter for escrow.
yep.
We get no involvement with the transfer of funds.
Okay, great question, Jennifer. I would also say I've only done one purchase, but in my career, Jerry, so that was a couple years ago, personally with a client of mine, but we had to cash it out. But I was very clear with what we were doing. So on the designated broker side of things in the state of Washington, if you are using these creative type of things, I always want to be, especially if you have a finance contingency and you're using a good lender like Jerry, you want to protect your earnest money as a broker, and you're going to want to make sure you use the proper disclosure form in your finance contingency. And in my case, I not only used a 22A finance contingency in Washington, but I also used a 22 disclosure of funds, making sure that we had checked the other box that part of the down payment was going to be in the form of the crypto. And I was very clear on where that was coming from.
Well,
And
there,
that way the seller could then give our offer to that listing agent could give our offer to the seller, who then in turn knew that I had a solid deal. I had a solid performing lender, and then also the down payment was coming from cash out of the crypto.
well,
So
that's what happens a lot of times where I'll have a buyer come to me. I'll look at their assets, all their assets. I'll qualify them with the credit, their debt to income, everything that I need to get them pre-approved, and see that they have partial of their payment is going to come from crypto.
yeah,
And I'll pre-approve them, and I say, you guys can start searching, but I need to let the agent know that, hey, their down payment is coming from crypto, and they're pulling out the money now. But I need to have it seasoned for 60 days because I can't use their statement. Now I can possibly use the statement or their transaction summary, and we won't have to wait that 60 days. That's the whole big thing that I wanted to bring to your attention today is that a lot of times now just ask the question, hey, is the crypto pre-approved to be used now, or do we have to wait for it to season? And the
right.
lender should let you know this up front. So,
They should, but they don't, Jerry. I mean,
well,
that's
I know. And
and then we have to try to like make sense of it. And then as listing agents, if you get an offer
oh,
and you haven't had that conversation with the lender on where that source of the down payment is, that's a great question you should be asking that lender before you get into contract. And then you find out later that it's going to take a lot longer. And you're looking at 2, 3, 4 extensions.
yeah,
Never.
nobody likes extensions.
No. Rachel says, if I'm repping the seller, how do you determine if a buyer is legitimate if they offer to buy a home with some form of cryptocurrency? I would say to answer
That's
your question, ask questions.
That's the key part of the whole thing. The seller needs to accept the Bitcoin, cryptocurrency purchase. Because if the seller doesn't accept it, then the buyer's going to have to cash that out and do a regular
Right.
purchase price, purchase with money.
Yep.
Yeah, see, so no matter what with lenders right now, they have to cash it out. We're not accepting crypto as part payment or as direct payment. So we are taking the value of the crypto, cashing out that value, and then using it cash, if you will, from their own existing accounts. So we're not taking crypto yet.
Okay, and then how are the taxes handled? I think we kind of answered that as well, didn't we?
Yeah.
It's normal. You're still paying excise tax in Washington. You're still handling your taxes as you would. There's still capital gains if you pull things out, things
For
like
sure.
that. Um, Julian, I think we got your question last year. What was the percentage of buyers? We answered that one.
Now, there's a difference between buyers and the people that actually used their crypto accounts and pulled money out for their down payment or closing costs. And that's the percentage I used, which was 14%.
Okay, perfect. Another question that came in from like Rachel. Great questions, Rachel. Thanks for bringing this up. Are lenders starting to ask consumers about their Bitcoin wallet as part of the application process, Jerry? Or is
Well,
that something that you foresee coming down the line?
that
Or
is
did you
that is a
ask that
question
question?
I actually ask them because when I ask for documentation, I ask for bank statements of all accounts that they own, not just their banking, not just their checking and savings. I want their 401k, I want their crypto, I want everything that they have so that I can
Mhm.
see what their assets actually are. And
Okay.
that helps me pre-qualify them. So I ask the question, do they usually ask me? No. No, no. And so you have to ask them as a lender, I give them the list of documents that I need to pre-qualify them or pre-approve them. And I like to have all of the information before I pre-approve them.
Great. Okay. Other questions you guys have? You want to unmute your line? You got two people who've done some crypto deals, and I certainly have done one. I'm still new at this too, Jerry. I'm all learning it just like you are. Anything I can get my hands on, I'm reading, really trying to understand. And there's just you can see almost on the horizon that it's coming, right? And it's
There
like
are
you can even trace it.
so many changes going on right now. A lot of different things that are happening to help first-time home buyers and to help any home buyer really right now to be able to afford a home. Home prices are higher, interest rates are higher. It's just becoming very expensive to own a home. But it is the American dream, and it is so much better than renting. It still is, always will be, you know. And unfortunately, it's just a little bit more expensive right now, but we're trying to make it better and easier. And so that's the goal of all lenders, I think, right now.
That's
Well,
great.
and Rochelle, so if additional questions come up anytime, I'm always available. So call, text, and email, either way works. I'm happy to help with any questions that might come up on the title and
There's
escrow
one
side, of
person that
course.
just texted me. Hang on one second. Um, this person wanted to be anonymous, but how do you deal with in your world, Hector? This is probably for you on fraud. There are people that like to say they have crypto, but then they don't have the crypto. How do you deal with those frauds? Can you look people up and find
No,
out?
we don't. We don't. Again, on the crypto, we have nothing to do with the financing. We make sure everybody understands that. We make them sign documents that they understand that. And if there is a fraud, we have no kind of liability whatsoever.
Okay.
So that's, in regards to the crypto, which is different if we're talking about a regular purchase. It's a different deal. But on the crypto, we got no liability. It's like you are on your own, sending all these funds and all that. But, again, so we need the seller to give us authorization confirming he has the funds. Then we close it.
Right.
So take that as a security.
So would that be something that you would, I think Rachel has a question. What questions should you ask to vet through this fraud? Would that be something like we could say I have a purchase and sale agreement, it came in, partial payment with crypto, seller's like, ooh, I don't know. Is there a way to at least, I mean, through the title side of things, Hector, you can see if they've purchased, who that person is through
There's
title.
no difference. The title is
Doesn't make
normal
any
business
difference.
as usual. There's no difference because they're paying with crypto.
Hmm.
Uh,
Didn't
and
you mention something,
again,
Hector? Hector, I'm sorry. Didn't you mention something about the seller having to receive the funds prior to you guys closing?
yes. Well, but the seller would say, Yes, Hector, I was paid. I got $1 million in crypto. I'm happy as it can be. Close the deal. Okay, so then we close it
Right,
once the seller gives us the green light to do that. We will not close it without the seller's blessing.
right.
Take that as a security measure, again.
Okay, so it's a little bit more, I think, than the proof of funds. I think we need to be asking more questions about where that,
Yeah.
where,
Again,
what
it's a
actual
high
crypto.
risk transaction, right?
Hmm.
As
Yes.
of today's standards. So,
So the more information you can provide or the more comfort you can give that seller and that buyer during that transaction, the better it will be to make sure the parties are in agreement with the terms that they're set forth. Okay.
what
Other
kind of
questions that
crypto?
come in? Anything else you guys want to open your mics? Speak up.
There's there's different types of crypto. It's, just basically anything, any kind of what do they call it? Financial, just money in a digital form. So there's even things like you can get a painting. There's other kinds of cryptocurrency. Not just
Yeah.
money.
Right.
So there's a long list of different kinds, but yeah, we'll just call it crypto as a general term.
How does an agent protect themselves from fraud on either side? If the buyer sends $1 million and gets it, but then they can keep the money, how do you protect yourself if you're an agent trying to be in the middle of this type of transaction?
Well, I mean, if you're representing the buyer, of course you want to probably want to, confirm as much as possible. Obviously sometimes meeting in person is not possible, but strongly recommended. Maybe have I don't know what you guys do that part. You guys check the buyer's social security number. I don't know.
We've seen even
Um,
manufactured driver's license though. I mean,
right.
there are some fraudsters out there. So
Oh,
Linda,
oh yeah. Oh yeah.
we
And we
see
get
it.
hit with them all the time. And people complain, and I get it. The secure portal that we have, it's given me more of a headache than help, right? Because everybody complains, oh my God, the login again. Oh, it's not working or whatever. But that secure portal is bulletproof, and I strongly recommend to use it. And yeah, so even right now, as of July, actually, anybody who purchases a property after closing after July of 2025 that signs up to the secure portal, that's the only requirement. Sign up to the secure portal. You get free forever title. What do they call it? It's a kind of like a title monitoring system. So anything that's recorded on your title, we will notify you. Hey, there's a HELOC for $80,000. Was that you? So I don't know. That one's
That's
it's a
cool.
free product actually.
So a
There's
lot
a
of people
there's
are
a
doing
title
that.
company. You can see it on TV. There is a commercial. They're selling it, but we give it out for free for the buyers that close with us.
Okay. Lynette,
Anyway,
that's a great offering, Hector. Thanks for
mhm.
sharing that. Lynette said, is there a document available that can be provided to the seller informing them of the potential risk of accepting an offer that includes crypto? Because we don't have so many of them, Lynette, I don't think we have anything that we've created, but the more and more we talk about it, the more requests we get for it. That would be an opportunity for us to sit down with an attorney and draft something like kind of like a disclosure statement, like we've done with wire fraud and things like that.
We
Uh,
have that form. We
you have,
have that. We did type up the form. I will send you the package that I have for this class that
and
we
put that in
do.
there.
It's in
Beautiful.
there. It's
Lynette,
two forms, and one of them
yay.
is exactly that.
I'd love a copy of that too, Hector.
Of
If I
course,
could
Of
of
get it, that'd
course,
course.
be
I'll
it's
send
great.
you one, Jerry. Yeah.
I believe there was another question there about asking about the value after 60 days. Um, the uh, the value doesn't matter because the whole 60 days is so that it seasons in their bank account, so that the deposit doesn't show in their bank account. That's the whole reasoning for the 60 days. So when they withdraw the money, they withdraw the money. If the value is already there in their bank account, it's already in cash. So we don't have to worry about what the crypto is worth at that point because it's already been sold.
Okay, awesome. Hopefully that answered your question, Alex. Um, yeah, Stephen, so you guys are helping each other out. That's great. Thanks for the comments there.
Yeah.
Hopefully this was helpful. We got one more that just came in. Let's see. Great, thanks. Okay. Super, super good to talk to both you guys. It's nice to have kick off the year with some really fresh content. Thank you so much for giving us your words of wisdom. We look forward to seeing the takeaways and the handouts, Hector. That will be very nice. And I'm sure Jerry will enjoy seeing that too. And you guys just keep up the good work out there. There's a lot of creativity, but we want to also be on the watch for anything that doesn't feel right, seem right. For whatever reason, the first of the year, there always seems to be a few fraudsters that are out there trolling you guys. So
Oh
be
yeah.
careful
Yeah.
as well. And,
Excuse me.
yeah, go ahead.
Yeah,
So,
I do have a question. Sometimes, the buyer may not know about this. If they have the crypto, they sell it and they decided to make an offer on a house, they may not disclose it. So should we ask questions to verify, how long did you cash it out or something like that?
That's up for, yeah, and that's a great question because the lender needs to disclose that to the real estate agent or to the buyer's agent and let them know if it needs to be seasoned for 60 days, how much time is remaining, has he had it in there? Let's say I got a statement for December. I'm going to need so it'll still show up or it won't show up in January's or February's. So I'll have to wait until March's statement to qualify them. So
mhm.
that would mean another 60 days on top of that. Or let's say he hasn't removed the money yet, but he found the house, he wants the house. And like I said, the big thing about what I was trying to tell everyone today is that now I am able to go ahead and get that money or use that money, even though it's not seasoned, because I can source it now using that statement from the Coinbase account or the crypto account that it's in. And I will have already verified that and had that approved by underwriting before I talk to my agents. Plain and simple. So that way, there's no question, and we don't have to do an extension, and it's already approved.
It's kind of like we're fast tracking it. That's
Right.
kind of the best way to describe it, Jerry. Back in the
Yes.
day when we had a certain deadlines we had to meet, sometimes some lending institutions can get ahead of it just because of their underwriting processes.
Right.
So
And
that's
I
that's
would
great.
say, Tracy, if you have a client that plans to use crypto, you want to disclose that from the day one, because if the seller doesn't accept it, you're going to waste your time. So just want to make sure that that's all disclosed and very crystal clear that your client is planning on using crypto. So if the seller's okay with that, that's fine. If not, move on to the next one. But if it's just to, work with a lender to show that they have funds, okay, that's a different deal. But
Right.
if they intend to buy with crypto, that has to be disclosed, crystal clear.
Got
And
you.
not all sellers will accept it, of course.
Got you. Got you. Thank you.
Hmm.
Hector, can you put your contact information in the chat if you don't mind? Uh,
Sure.
Same thing, Jerry, if you wouldn't mind doing that, that would be
Sure.
awesome. We've got some people that are wanting to take down your contact information. It's been a busy Monday, and I should have probably put a slide together with both of your contact information, but hopefully that you
Not a
guys put that
problem.
in your chat. How they get a hold of you, I think both of you are very, very knowledgeable people, been in the industry a long time. Uh, and Hector calls me on the same day every month. He's the best guy that you'll ever run into at following up.
Oh, thank you.
Yes. Even if I don't answer my phone, Hector, I know it's you. And I appreciate your attention to
You
detail.
always said that, I know.
Yes. Love it. Okay, fantastic. Stephen, great idea, Stephen. Next time we need to update our listing and buyer agreements that we can add that there's crypto and provisions for that. That's a great idea, Stephen. Thank you for
Kind of like
coming
in
up.
the seller financing, it sounds like, Stephen. It's not a bad idea.
Yeah. We want to definitely appeal to our modern audience, don't we? We have a lot of Jerry, to your point, 40s and 50-year-olds that are out there looking to use some of their crypto and some of their creative finances that they've stored away.
Yes.
Okay.
And we
All
want to
right.
start
Anything
we want
else?
to really start concentrating on the younger generation, the younger Gen Zs and those guys, because you can get them qualified. They're all making great money now. Those are working at Boeing are making six figures. They can afford a home. It's just getting them to understand that, the difference between their $2,800 rent and their $3,500 mortgage payment is not a big deal.
Yeah. Yeah, that's the truth, isn't it? Okay, well we'll catch up with you guys next Monday. Have a good week.